In today's energy markets, let's take a look at natural gas futures here today as they're realizing some selling pressure for the second consecutive day. We're seeing them down about 3.5% today, right around the 2.57 level. And looking at some of the dynamics within the market construct, I think you can point to the inventory data that came out this week as part of the reason maybe why we're seeing natural gas futures giving up a little more ground today. The draw was less than expected, and when you look at the 5-year average, we're still running well above that as far as the inventory numbers globally. So I think that's another factor why we're seeing a little bit of this selling pressure. Couple that with the economic activity still being a moving target, and I think that's playing into the market expectations. And the third thing, which I think helped natural gas futures initially earlier in the week, were the forecasts. They continue to be, showing signs of a cooling trend here in the next month as the forecasts continue to shift towards a colder weather environment. But nonetheless, I think some of that initial reaction is losing some of its impact here as we close out the week. Looking at the rig counts today, we did see an increase of 5, a 10th consecutive increase in rig counts. Now that was all in the oil area. We did not see any change in gas rig counts for the week. I do want to also look at, from a technical standpoint, if you look at the general activity over the last couple of months, this 2.55 level was really pretty much right in the middle of the range for the price action between December through the end of January. So again, we're kind of in the middle level here as we are seeing the selling pressure today. And also later today, we do get the commitment of traders report. So it will show positions in natural gas futures. And I think that's another dynamic, another possible driver why we're seeing again some hesitation here as traders and market participants are waiting to see that report.